Hello, my name's Rachel and welcome back to my channel. In today's video, we are going to be talking through the pros and cons of dividend investing. So I was recently reading the Investors Chronicle, and within the magazine, they have a section called the Portfolio Clinic where they go through people's portfolios and then assess them and say whether there's anything they need to change to meet a specific goal. And within this week's Portfolio Clinic, there was a lady who was investing for retirement to sustain her lifestyle into retirement, and she was focusing on capital growth rather than dividend investing, which got me thinking about the pros and cons of dividend investing. Now, the expert that responded to her said, "You are right to aim for capital growth rather than dividends. A high dividend is often compensation for some defect, such as slow growth or extra risk. What matters is total return, not income." And that response came from Dillow, who is the economist at the Investors Chronicle. Now that sounds to me like he thinks that dividend investing is certainly not the right thing for this lady and that she should continue to focus on capital growth. So in my own personal portfolio, I don't focus on dividend investing at the moment. However, obviously I am invested in some different stocks, shares, ETFs, funds and trusts that contain stocks that do pay a dividend. So for example, with the S&P 500, over 70% of the stocks within the S&P 500 do currently pay a dividend. So it's not that I do not invest in companies that obviously pay a dividend, but what I mean is that I don't currently choose to go ahead and choose my investments based on their dividend. I focus more on potential capital growth. So I'm sure if you've clicked on this video, you probably already know what a dividend is, but just in case, I will give you a very quick explanation. So when a publicly traded company generates profits, it has three choices for using the cash. It can direct the funds into research and development, it can save the money, or it can return the profits to shareholders as dividend payments. And that definition comes from Forbes. I'll pop the full article down below if you want to check it out. So now we're all clear on what a dividend is, which I'm sure you were already anyway. Let's move on to the pros and cons. So I'm actually going to start with the cons first. So one of the biggest cons or negatives when it comes to dividend investing is that companies can choose to slash or suspend their dividends when they want to. An example of this is that in July 2020, Disney suspended its semi-annual dividend payment, and then in January 2021 they also did not pay this cash dividend payout. So if you are reliant on dividends for your income, say for example in retirement, then it's important to be aware that they can be slashed or suspended. The next con with dividend investing is that you cannot control when you are going to be paid the dividends. So you can put a plan together and get a rough idea of when you're going to get specific payments. However, you might find it difficult to balance this throughout the year because different companies pay dividends at different times of the year. So for example, if you're invested in Johnson & Johnson, they pay a quarterly dividend. You would only get that every quarter. So you might have to try and rebalance your income over the year because you simply can't control when you're being paid your dividend. So the last biggest con or negative that I have for dividend investing is lack of diversity within your portfolio. So often when you are investing in dividend stocks or dividend shares, they are often well-established companies. So you are often missing out on those small and mid-cap companies. So those companies may be choosing to not pay a dividend because they're working on something very innovative or groundbreaking, and they are putting that money back into the business. And those companies might be the kind of companies where you would see a lot of capital growth. And by investing in well-established companies that do pay a dividend, you are missing out on potential capital growth of the smaller, small cap and mid cap companies that do not pay dividends. Okay, let's move on to the positives of dividend investing. Let's get a bit more positive. What are the pros of dividend investing? So the first one is that obviously you do not have to sell an investment to get an income from dividends. So say if the market is in a bit of a dip or it is crashing, you should still hopefully get your dividend payment. You haven't had to sell your investment, but you are still getting your dividend. Obviously, as I said, that first point and that first con is that companies can choose to slash or suspend their dividends, but if they have decided not to do that, then despite market conditions, despite a dip or a crash, you are still getting that regular dividend payment, which is real positive. And then another really big pro with dividend investing is here in the UK, you actually are not taxed on any profits you make from dividends up to a dividend allowance, which is currently set at £2,000. So I'll include the government link down below in case you want to have a little look at that in more detail. But that is a really positive thing. If you do not have to pay tax on dividends, that's fantastic. I actually hold a lot of my investments in investment ISAs and a self-invested personal pension, which means that I also don't have to pay tax. But if I was holding them outside of these tax efficient wrappers and I was invested in dividend paying companies, then I would have a dividend allowance of up to £2,000, which is awesome. So what is the future for me with dividend investing? At the moment, I am not planning to build a dividend specific portfolio. However, as I said, I am invested in companies that pay dividends. I'm also invested in different funds that also pay dividends. However, the kind of funds that I have purchased are accumulation funds, so that means any dividends that are paid go straight back into my investments. So at present I am not focusing on building a dividend specific portfolio. However, it might be something that I might look to do in the future. I think that I have a lot to learn when it comes to investing, and I will be looking into dividend investing in more detail, and it might be something that I look to do in the future, particularly if I want to take an income from my investments. So building a dividend portfolio might be something that I look at in more detail in the future, but at the moment I am focusing on investing in companies where I think there is potential for capital growth rather than investing for dividends. But do let me know in the comments down below if you think I have missed any major pros with dividend investing. As I always say, I am just a beginner investor, learning as I go. I've only been investing for a few years. So if you feel that I have missed something major, then please do pop it in the comments down below. Any questions, as always, just pop them in the comments down below and I will certainly get back to you. Thank you so much for watching and have a really lovely day. Bye bye.